Hello, everyone. Welcome to the stock-specific class here for Thursday, January the 21st. I'm not going to have a training today. We had some issues with the website just really up until about 15 minutes before this class started. So I was kind of scrambling to just get some of the stocks that we can go over today in time for the start of the class. So we'll continue the training on Tuesday. We'll have a topic to cover, and I'll talk about that when we have our market update next Tuesday. As far as the market's concerned, last time we were talking about a potential market reversal. Actually, the last couple of updates, we've been talking about potential for market reversal. We're getting a lot of the reversal signals that were starting to show up. And then suddenly the market just kind of pulled back and it kind of just consolidated. It pulled back a little bit, and then it just kind of charged forward again. Now, when this usually happens, one thing I talked about with some of those reversal signals, and I talked about on Tuesday, is that sometimes those clues start showing up a little bit early, meaning they don't always predict the exact moment when a correction takes place. They just tell you that you're getting into a condition where you could get a pullback or a correction, and you have to pay attention to that, and you can use that. You can use those clues to kind of manage accordingly. And so, if you did tighten up stops or get out of some trades with some of those signals showing up, and then the market starts charging forward again, you might find yourself a little bit frustrated that maybe you missed the move over the last couple of days or something like that. But it's important to recognize that you can never know exactly what the market's going to do, or nothing can tell you exactly what's going to happen, and definitely not exactly when it's going to happen. So, if the market does, continue to move from here, well, you can jump back in, get into some new trades, and kind of go from there. But I would really keep an eye on, though, these clues start to show up again, because the market is getting stretched. I get it that there's a lot of stimulus coming in, and with the new administration, there's talk of trillions of dollars coming in stimulus. But you have to remember that the market has already been trading on the anticipation of that. A lot of the rally we had in November, remember we knew the election results early in November, and we were anticipating that would mean that there would be more stimulus. And so a lot of the rally since November is reflecting that expectation that stimulus will come into the economies. So I'm not saying it can't still push the market higher, but you got to be careful not to assume that just because some of these announcements are coming out right now, that it means that it's just starting, that we're just starting to surge. We've been surging for a little while now, and the market is always doing that. It's always anticipating. In fact, one of the sayings that traders often assume is that the markets are trading today based on what they expect the economy to do 6 months from now. So if there's any sort of anticipation that things are going to slow down, or that things could start to level off, the market will start trading that today based on that anticipation later on, and vice versa. I mean, if the current conditions are terrible, but there's anticipation that things are going to be getting better 6 months from now, the market could start rallying. So sometimes that doesn't make sense when you're hearing day-to-day terrible economic numbers and things like that, but the market is rallying. If you understand that the market is always forward-looking, it's a little bit easier to understand what's going on and to be able to trade that. And that's why I think it's so important to focus on the trend and not the noise around everything. All the what people are talking about on CNBC all day long and all that kind of stuff, because it's so difficult to break down all of those arguments, and they can be conflicting. They're interviewing one guy that says that he thinks the market's just taken off, and you interview another guy that thinks we're in a bubble, and you're sitting back saying, well, what is it? Because those are two different outlooks. Well, if you focus on the trend and reading what is actually happening, you're going to be better off and most often be on the right side of what's going on. So let's take a look at, I know we've had the screen here just sitting here as I've been chatting here, but let's take a look at the direction alerts here. One thing to point out is that we're moving back into those extreme ranges again. The momentum is back in the extreme range. Now, again, it can get more extreme. We can get all the way to the right side here, so there still could be some room to run. The breadth indicator is in the high area, but it's real close to getting into the extreme, and I'm sure if we continue to have a few more updates. Today's kind of a little bit of a mixed market day. But if the market starts running again, you can see this get into that extreme range. But this is still showing that there still could be some room to move a little bit higher, at least in the near term. And the sentiment is kind of backed off a little bit. It's in the complacency, but remember last week we were starting to bump into that extreme. We're starting to get into that extreme range there. We'll keep an eye on that to see if we start to get into that extreme complacency area there. As far as the buy-sell ratios, we're still kind of wide here meaning there are a lot of buys versus sells. And remember that in the earlier stages that can be good, but then when you start to get too many stocks that have buys versus sells, it can indicate an extreme condition, and we're kind of in an extreme condition. You can see when you reach these extreme conditions, you start to move back towards the mean, or even cross here. You cross back over where we sold off enough to where the sells start to increase more than the buys. But we've been holding this kind of extreme range for a couple months. We came a little bit closer together here, but then went right back out again. So this is, I wouldn't say that anything screaming that we've got to pull back immediately on something like this. But like I said, if those under the direction alerts, if we start to hit those extreme levels and you're dealing with a really wide buy-sell ratio chart here, it's just one of those other clues that says, hey, this is an extreme condition. We also look at the sentiment indicator right here that's gone back to that extreme area. We went really extreme right here, but we didn't pull back very much in the market off of this. But the indicator came back down, and now it's going back up again into that extreme area. So again, this is what I'm saying, that sometimes you'll get these early warnings that conditions are getting extreme. And what happens too, the reason why you don't always get sell-offs when you get some extreme conditions is because there's a lot of people that look at this stuff, okay? And you have to remember that the market, whenever I talk about this, it sounds like the market's like a living, breathing dragon or something, but the market is always out to hurt the most people as possible, meaning that if there's too many people that expect something, it's usually not going to happen. That's why when the market gets really bullish, when everyone thinks the market's going to go higher, that's usually when you're going to get a correction or a crash, because the market will tend to do opposite of those extremes. If everybody is really bearish and everybody thinks the market's going to drop further, that's usually when you're at a bottom and things start to rally back up. But what can happen psychologically here, and I just think this could be your training for today, I guess. We'll call this the training for today, a little bit more psychological training. But so we got a lot of these indicators that were showing a possible pullback last week, and they were lining up. I mean, we had a whole bunch of them that were showing that, hey, this could be imminent. It could happen real soon. Well, now that we've kind of pulled back off of those and the market has kind of surged forward, well, what happens psychologically to a lot of these people that were looking at the same indicators? Well, market's taking off again. We didn't pull back. I'm missing out on this. What do? They start chasing the rally, and that's really what we've seen the last couple of days, is people just chasing after the rally, they're jumping back in. Everyone was talking about a pullback, and rightly so, but now they're charging back in. Well, what can happen then is that first move, the move into those areas, is the head fake. That's the early warning sign. The market pulls back a little bit and then starts surging again, and then these indicators go right back into those overbought conditions. Now these same people that are looking at these indicators, what are they going to think? They're going to think, well, last time it hit this area, it didn't pull back. This market it's different this time. This market is different. I'm just going to go all in. I'm going to ignore these warning signs, and there's no way this market is pulling back or dropping. So they continue to pour money in, and then that's when you get the pullback. So sometimes when you get these extreme conditions and then it reverses, it gets people to not it gets some people to not trust the signals, or they stop following the signals. They start getting caught up in their emotion, and really the strong emotion that they're following is that fear of missing out. And that the FOMO, people call it the FOMO, but the fear of missing out is such a strong emotion. It's one of the hardest ones to fight in the market, and I think it's really important. One of the ways you fight this, by the way, is you've got to make sure you understand the long game. The markets are going to be here. They were here yesterday. They're here today. They're going to be here tomorrow. They're going to be here 10 years, 15, 20 years from now. Okay. A lot of times people get caught up in situations like this, thinking that, hey, this is a once in a lifetime opportunity. I've got to take advantage. I can't miss out on this. If you missed the rally over the last couple of days, who cares? You're going to get another rally. Now, you might have to wait maybe for the market to correct or pull back and give you a better entry and another opportunity, but it's going to give you another opportunity. And so, if you truly understand that principle and you have that patience to know, hey, I don't want to go chasing this in an extreme condition. I'm going to get a better chance. I just have to be patient. You're going to do very well in the markets because you have that proper perspective that you're going to get another chance. It's going to give you another opportunity. This isn't a once in a lifetime opportunity. There are tons of once in a lifetime opportunities in the market, and so just keep that in mind. If we start to see these conditions get more extreme again, you take the defensive action. You tighten up stops. You sell some positions to take profits off the table. Go to cash. Wait for that correction to take place, and or even try to look for opportunities to trade, to short or something if you know how to do that. There haven't been many opportunities for that, by the way, to short yet. Haven't been a lot of charts that have really screamed that they are going lower. But anyway, the point is that you just keep following what the indicators are kind of telling you to do, and realize that you don't have to ignore them and start chasing with the rest of the crowd. But we're starting to see this start to get more extreme again here, and so we're going to keep an eye on that. If we look at our individual charts here, we're going to get to the specific stocks here in a second, but I think this is important to kind of go over these conditions because they've kind of changed a little bit. But you can see if we look at the SPY, it looked like we were starting to roll over right in through here, and then we've surged. Now today again is not. It's basically flat today. We're not up by. We're up. We're barely up, but we're just kind of flat right there. The big mover today is the Nasdaq. The Dow again is kind of flat, but even then, these show that there still could be some room to kind of break out of this range here. So we could see a few more days where it extends a little bit higher, and we move into maybe that extreme reversal risk. In fact, let's go back to the SPY. I think the SPY moved into the extreme. Yeah, it moved into the extreme range here, but it also broke out. broke out of that area yesterday. But it's possible it could still run a little bit further. We can look at the NASDAQ here, the QQQ, NASDAQ 100. It's really surged, and it's now on the far right side of the extreme range. You've broken out of here. And another thing I want to point out, you remember I've said it a couple times over the last month or so. I said I really felt like we weren't going to get a significant correction until we started to see the FANG stocks start surging again. The big cap tech stocks, money going back into the big cap tech stocks, because those have been lagging pretty much the whole rally. The main part of the rally the last few months has been in the small caps, and really small cap tech. And we're seeing that now, that we're seeing those large cap tech stocks surge again. We'll take a look at them here in just a second, but this could be exactly what I was talking about, that we're seeing money pour back into those stocks. It's kind of the last part of the rally before we get a much bigger correction. But I think what's going to happen, though, is that we'll see money go into the large cap tech, and we'll see the Russell 2000, the small caps, start to lag. And so we could be starting to see that now, because the Russell 2000 is down almost 1% today, while the NASDAQ 100 is surging. So we're seeing kind of that transition kind of take place. So this is something we definitely want to keep an eye on. If we continue to see the NASDAQ 100 keep going up, and the small caps pulling back, or at least underperforming, it could really be a signal that we're kind of in that late stages, and we're probably due for a little bit of a decent sized correction. And by decent sized correction, I think I've been talking about more in the likes of what we saw back in September and October, those two pullbacks that we saw back in those months. Not huge, but enough to kind of alleviate the overbought condition. Another thing we can keep an eye on is the VIX. Let me skip down. Oh, there it is, right there. Hold on. There's a lot of support in this area right here. We're holding it today. If we significantly drop down below that, that could be a lot more bullish for the market. It could be that we're going to surge higher a little bit for a few more days. But we want to keep an eye on that support area right there. If it starts to move up from there and we start seeing the market sell off a little bit more, it could be signaling a possible correction. So I think we're real close, and so you want to be real careful, and just kind of keep looking at these clues, these signals to help make your decisions that you need to make. But real quickly here, we can look at some of those FANG stocks. You look at Apple. Again, just the last couple of days, big move the last couple of days, and there's still some room for this to run. So it could be that there's still a few more days on these. Netflix obviously had their big earnings that they moved up huge yesterday. Now it's hard to kind of keep moving up after yesterday's move, so we're down a little bit from where we were yesterday, but that was a huge surge in Netflix there. Google. Same thing. Last couple of days have been pretty big. Amazon, same thing. And like I said, these look like they could still continue to move. And it could be that more of that money comes out of the small caps and into these big cap techs, Microsoft. Same thing. So keep an eye on that. All right. Let's get into specific stocks that we can consider. And let's start with computer and technology here and go into the hold section. One company that's showing up on here again, this is one that I like quite a bit, and I've recommended before, is Blink Charging Company, BLNK, 99 strength rank right now. Let me switch this over to signals here. But you've got a nice strong uptrend. Now it pulled back, it went to hold. I think this is where we entered again off of this little pullback right here when it went back to a buy signal. Moved up to the resistance area there, then pulled back again. Now what we want to see here, now that it's gone back to hold, is we want to see a higher low. It's okay that we didn't clearly break out of this range right here, but if we can see a higher low, it shows that there's going to be pressure building. So what will happen here is you've got this area of resistance that it's had a tough time getting above, but if you get that higher low, it starts to build what we call an ascending triangle pattern, and usually this is going to break out to the upside. And so if this thing can go back to a buy signal and not really go too much, it could still go a little bit lower, but you'd want to see a higher low from this one right here. But today's candle right here looks like a little bit of a hammer formation. If we go switch this back to candlesticks, so I'd be pretty confident this thing is going to rally off of today's reversal. That's a bullish reversal after pulling back right here. So this should go back to a buy signal here pretty quick. And we're not that far away from going back to a buy signal. And I would expect that the next surge up into this area should break out and go higher. Another kind of little training I guess I can give you is that this is what we call a double top right here, where it reached the peak, pulled back, came back to that area, held as resistance, then pulled back. Double tops are pretty common. Triple tops are very rare. They don't happen very often. Now, they do happen sometimes, so you do have to respect the fact that it could happen, but they're very rare. So if we start to move back up to that area again, most likely we're going to end up breaking out that third time. Now, a lot of this could have to do with market conditions as well. If the market starts selling off, all these stocks are likely to sell off with it. But we don't know. We don't know if the market could hold up. It could consolidate a little bit. It could move sideways a little bit to alleviate an overbought condition, and then charge forward again. We just don't know how it's going to perform. And so, if this does go back to a buy signal and the market still looks like it's not, it's not flashing extreme overbought conditions, this thing could definitely break out and continue to run. It definitely fits into the narrative of the new administration looking at alternative energy, and so that could be another factor, although that shouldn't be the main factor. It should be the chart, but the chart's looking pretty good there. All right, let's stay in the computer technology and look at what I brought up before as well, which is Cloudflare. NET is the ticker symbol down here. It's a 96 strength rank. And this is one that I pointed out before, and it looks even better now as it's got this little bit of a bowl-shaped move, and it just went to a buy signal today. So remember, these scans update overnight. So tomorrow, if it holds, and that remains a buy signal at the end of the day, this will move into the buy side instead of the hold section. But it also means that if you're recognizing this early, that's the confirmation. If that's the confirmation you're looking for, if that's the signal you're looking for to get into the trade, is for that to go back to a buy signal, then it's giving it to you right now, and you could maybe get in before it officially shows up in the buy section. But that looks like it's getting ready to break out again and move higher. And I've liked this stock for a while as well. Nice uptrend, and it looks like it's still looking pretty good there. All right, let's go into the retail sector here. And I'm going to look at NLS. We've looked at this one before as well. Nautilus Group. It's a 97 strength rank. Now, what I like about this one is, and I've pointed this one out before, but I like the inverse head and shoulder, potential inverse head and shoulders pattern right here. Now this thing hasn't just taken off out of that. It's still kind of just drifted up a little bit here. It's gone to a buy signal and back to hold a couple times, but it's going back to a buy signal again today. So this one will also move over into the buy section tomorrow when this thing updates. But this looks like it's building a nice base, and you might have to be a little bit patient with it because it's not taken off yet. But again, this could be one that does start to surge here pretty soon. And at the very least, you would expect it to get back up to this previous high when it does, up to about 27. So there's a lot of upside potential there from where it's at. We look under the construction section. Now, I don't usually go into construction that often, just because there's usually not a 90, there's not a lot that, at least in the hold section, that are in the 90s as far as the strength rank. There's a 98 strength rank right here, but it's a 1 cent stock, so that company is really, really small. So I don't really want to consider that one. But I did like the next one down. It's an 83 strength rank, and FND is the ticker symbol. But it has a nice trend. Now, remember what I've talked about before, some of these sectors, there's a tendency for them to not always get those high strength ranks. But the trends could look really nice. And so that's why, construction is one of those. You're not going to get a lot of 98 strength rank. You might not find a lot in the 90s anyway, but there can be a lot of really nice charts. And here you've got, I think, a really nice chart. This has gone back to a buy signal today as well. You can see how it's held the support of that uptrend. Look at that. Every time it's pulled back to that line. And then you can even draw an upper one right here. So you've got a nice trend channel right here. A new buy signal. This thing could run up to the 109. Could break out and even go higher than that, but that's the upper part of the trend channel there. And so that could have a nice little run in it from where it is right now. And it looks like it's already starting to take off today and giving you that buy signal. But that's a nice little chart right there. And so again, I don't care so much that it's only an 83 strength rank, because the chart looks really nice, and knowing that the sector doesn't always produce strength ranks in the 90s, at least under the hold section there, that would be a good one to consider. All right, and finally, let's look under industrial products. And I want to look at this CPST right here, Capstone Turbine. It's a 95 strength rank. But I like so you've got the pretty clear stair step here. You've got a nice run up right here, and then it kind of moved a little bit sideways, consolidated. There's your step, moved up to here, kind of consolidated. There's a step, moved up to here, and now it's kind of pulling back. But again, notice how it's kind of choppy as it's pulling back. That's kind of a corrective type pullback right there. You'd like to see this previous consolidation area hold, and it seems like it's done that. It's kind of held in that area right there. The confirmation is you'd want to see this go back to a buy signal, which it should be pretty close. Yeah, it's real close. Any sort of up day should go back to that buy signal. And you could see that trend continue. And if not, if it keeps drifting lower, then you don't care, because you never got the confirmation to get in. So, all right. So that'll do it for today. We'll see you on Tuesday. Like I said, keep an eye on these indicators for tomorrow and Monday. see if the market does continue to move higher. See if if they start moving into those extreme ranges. Keep an eye on the relationship of the NASDAQ 100, the QQQ, and the Russell 2000. Do you see those FANG stocks, those large cap tech, continue to go higher? Do you start to see the small caps either flat or moving downward? That could be an indication that we're getting real close to a bigger pullback. And definitely, if I see these things really happening by next Tuesday when we have the market update, I'll definitely point those out. We can talk about it at that time and see what the outlook is at that time. All right, thanks everyone. Have a great weekend, and we'll see you next Tuesday for the market update. Bye now.